Welcome back to Switzer on Sky News Money. It's May and the market is starting to sell off. And so is this a sign of things to come? We'll test out the proposition with the redoubtable FN Arena's Rudy Philippek Van Dyke. How are you, Rudy?
I am good so far.
Okay, a lot of people...
The answer was no.
Yeah, the reason why I talk about selling... Well, I talk about selling, mate. A lot of people ask me that question.
Yes.
And there is a bit of a historical pattern. Doesn't always happen, of course.
No.
But I've got a chart here. Let's kick off with the chart. I found this quite an interesting one. And this actually looks at...
Usually I bring the charts, but in this case you can bring it.
Yeah, I brought the chart this time. And there it is there. So
Yes.
it's the average half-yearly returns for 37 markets between 1998 and 2012.
Yes.
And what we see May to October is a measly return, 0.95%. But the other period, 10.69%. And clearly in that May-October, you get some periods where you might make 5 or 6%, but there are more sell-offs that bring that average down to 0.95.
That is true, and that is definitely something to emphasize. A lot of crises happen in October. Yeah?
Yes.
It doesn't mean that every October has a crisis. That's not the same thing.
Yeah.
But a lot of crises we had happened in October.
Yeah, and the US often goes down in September as well. Yeah.
And we have exactly.
Yeah.
So that distorts those data. Don't also forget, I see 98, 2012, there's 2 bear markets in there, for example. Because if you look post-GFC, I haven't done the data myself, but I know from memory, there's quite a number of years when the seller May does not work, right? For example, if you did it last year, you were not in a good state.
It was buy in May and stay.
It worked in 2015, but that was only because we had such a big run-up in the preceding months.
Yeah.
So I think people should, and I do know people do get into a certain mindset and they get a little bit jittery and stuff like that. I actually think we will not have, and this is a very dangerous proposition I'm now putting forward, but I actually think we will not have a sell in May event this year.
So the grizzly bear, Rudy Philippek Van Dyke's becoming a teddy bear for this year.
I wouldn't go that far.
But good on you, Rudy.
But I'm not set in stone at all times with the same view, and that's very stupid to do that.
Yeah, of course.
Only idiots never change their mind.
Sure.
And I analyze the markets regardless of what people think I should be saying.
It seems to me, Rudy, that if there is a bit of a sell-off, it won't be very deep, unless there's some weird geopolitical development.
We can't predict those.
Yeah.
But I think actually there's something else is happening, and I think people should definitely pay attention to this, because people always talk in generalized terms. The market, which basically is the index, all odds or ASX 200. But here's what I'm observing. For a brief time, we had resources and banks and very little else, and companies who are linked to the resources space, pushing the index up, and nothing else worked. Right?
Big cap top 20,
now, since February, resources have had the correction, and the correction is still ongoing today. And the banks, I believe, are correcting this month. There's a couple of reasons for that. Valuation very high, results not good enough to force analysts to
go to the next level.
That means once they pay out their dividends, which is going to happen this month, there's not a particular reason to own the banks, so probably weakness. And those 2 sectors have a big impact on the index. So from that perspective, we might have a sell in May effect. But something else is happening. See, for example, my portfolio, which owns no resources, no banks, people are talking, sell-off is happening in May. Look at my portfolio. Where? It's not happening. So if you own other stocks, there's no worry. And actually, I think...
Of course, you weren't as cocky pre-Christmas, but post-Christmas, you're cocky again.
Exactly. Right?
It just happens in the market.
Because you know that quality comes to the surface again. Right? And that's actually... So I believe that, and this is backed up by a lot of surveys and enquêtes that people do, and anecdotal evidence. The majority of market participants, both overseas and here, is still convinced that this is an ongoing uptrend. You want to call it bull market, that's fine. I call it uptrend. And it's different here, the dynamics are different here from the US, but it doesn't matter. The big picture is the index in the conviction of many people, is going to be higher at year end than where it is now.
Yeah. Yeah.
That means
And a lot of people who were nervous, say 6 months ago with me, have now become over 6,000. They're 6,250. A lot of people are saying that now.
See, my personal view is that over 6,000 this early in the year, way too early. Later this year, possible, and probably justified, depending on what we get in the second half.
And the economists asked, nearly all the economists, and I had Terry McCrann on this week, and Terry can be very bearish if he sees bad things. He actually admitted he's more positive about the second half of this year than he was, say, 12 months ago.
Oh, okay. Well, we'll have to see about that. But anyway, we can all make predictions about the future. But what I do observe is happening is that fund managers who en masse went out of the sectors that worked in resources and in banks, I think they're now putting, well, I put a certain there, they're putting money elsewhere.
Well, as you've seen, midcap was up 1.7% in April and 7.1% for the year. And when the big caps were going madly, I kept saying to you, isn't there going to be a great buying opportunity with some of these companies? Like CSL was sold off because they made so much money out of it. Then they probably rolled it into banks and resources. And once they'd locked in that money, they then went after CSL again.
Exactly, because you have to think about how silly the market sometimes can be.
Yeah.
It wasn't that long ago. People were talking about, oh, it's going to go below $90. You go like, really? It's 133 or something like now today. Okay. So imagine what was happening there. So if you are not in banks and resources, and in energy companies, and in mining services providers, and you are in the likes of CSL, InvoCare, Aristocrat Leisure, Technology One, Altium, you name them, I mean, you wouldn't even know what people are talking about in Sell and May, because those stocks are going up every single day.
Okay. Well, let's get off the big picture and go to the small picture. And what stocks do you think, either mid-cap or small cap, look like good value at the moment?
Well, here is the thing that we all have to keep in mind now. If the weakness that is sort of creeping in the market, if that is going to remain contained to the miners and the banks, then the small and mid-cap stocks, because we have the quality stocks that run, the CSLs, the InvoCares, the Ramsays, they've had their run now too, and they're all up. Like CSL is up a lot, and the other ones as well. So now money is going to go descend to the level below it. So we're now going to seek out the quality stocks at another level. That is dependent on the fact that the weakness we're seeing on the top end is not going to translate into a genuine risk-off environment, which I think, if we leave out North Korea, which is a risk, and we leave out really nasty surprises, which I think...
Like Le Pen winning the election.
That could be a nasty,
which would scare
surprise.
the euro,
that would definitely do that. I don't think that if we don't get a really risk-off environment, those stocks are now the next ones to pick up. And it's already happening.
And it's interesting, Rudy, I noticed that Blackmores has skipped up to about, what, 114 or something like that. It was hovering around 98.
100,
And every time it got to the 90s, the market would come in and buy. It just seems to be just sneaking up to a slightly higher level. But what companies do you like? I noticed that you threw in Aristocrat Leisure.
Oh yeah, I've called Aristocrat Leisure one of the prime.
Yeah, I mean ardently, Chris.
Yeah, definitely.
Just in case.
ALL. Yeah. One of the prime growth stories in the Australian share market, and way undervalued, not appreciated, because people have not appreciated the fact that the transition that has happened in Aristocrat, and the fact that they are killing it, which means that the other companies in the sector are doing it really tough. And the transition to online works perfectly for them.
Are the target prices on Aristocrat Leisure substantially higher than where it is now?
No, but they're still rising. See, and they're still up there. I mean, for an example, I mean, the target prices are probably around $19.
Where is it now?
It's now $20 a share price. But the latest upgrade in target price was from CLSA and it went to 23. So you see, it's
an outlier, but
it's it's the same with CSL. I mean, the target prices are around, let's say, 132. Share price is 133. CLSA again, just coincidence. They upgraded their target today, this morning, to $160.
And I will say that you're in good company because Charlie Aiken is like the Aristocrat Leisure for quite some time, and he always crows about it.
Exactly. And it is. See, in the Western world, we too easily try to play the break in the trend. And the Chinese go like, stay with the trend. Right? So Aristocrat looked expensive 12 months ago, and look at what it's almost doubled in share price since. I mean, it's stay with the trend.
And is it surprising that a gambling stock would do well with a president who once owned a casino?
Well, there you go.
There you go.
Exactly.
We're out of time, but is there one other company you just like people to think about?
Well, here's one stock I think people should have a look into. I've mentioned it before. I do think it's being treated like a retailer, and retail stocks at the moment, with the exception of Nick Scali, look like a graveyard.
Yeah.
My goodness, some of them look absolutely. This one is Burson Group.
Yeah.
BAP. And,
Babcock now, isn't it?
Babcock, yeah.
It was Burson.
Me using the old name, yes.
Yep.
Babcock.
Yep.
And it's the Midas
I like it too.
and the Autobahn. It's selling off at the moment. It's finding it really difficult to, and it's basically because people go like, oh, retailer, and just sell it with the other retailers. Yeah. It's not a retailer, essentially. Well, it's a little bit, but not.
It supplies all the mechanics and the car repair places.
Has a little bit of retail in there, but by far not enough to sell off.
Okay, mate. We'll watch that one. Rudy Philippek, Van Dyke, great to see you, mate.
My pleasure.
Coming up after the break, we'll be talking to a guy called Steve Mitchell from Resicom. Where do you go if the banks don't want to lend to you? Steve might have an idea or two, and then we'll talk to David Buckland from Montgomery Investment Management about small cap stocks.